Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
1490 WGCH. This is Carrie Lutz, and you're listening to the Financial Survival Network, which is brought to you by Miles Franklin. They've been in business selling gold and silver for over 20 years, and I'm a customer because when you buy, they ship. For more information, find them on the web at milesfranklin.com or give them a call at 800-822-8080 and get a free quote. There's a golden revolution taking place. It's spreading. And my next guest, you've heard from before, John Butler, author of The Golden Revolution, and it is starting to spread. John's talking to CFAs very shortly. John, how are you?
Hi, Carrie. Fine, thanks.
Good to have you back. So we're talking CFAs, Certified Financial Analysts.
Well, CFAs, Certified Financial Analysts. These are people working in the financial industry who have continued their education by studying for and completing the exams that are sponsored on a regular basis by the CFA institutes around the world. And by taking these exams and passing them, you qualify as a certified financial analyst. And there are 3 levels, 1, 2, and 3. And once you've completed CFA level 3, you're really considered to be an authority in financial matters, as if you, for example, had studied to an MBA in finance or something of that magnitude in terms of education. So it's a widely recognized credential around the world.
Gotcha. You're going to be doing a major address before that organization, aren't you?
Well, they're putting me on tour. They've decided that it is important that members of the CFA Institute, that Certified Financial Analysts, get a bit up to speed on gold. It's not currently part of their curriculum. It's not a topic that's covered in their exams, neither the history nor the theory of how a gold standard has worked in the past or could work in the future. But they feel that the topic is just unavoidable. And so they're having me present to their members here in London, in several other locations in Europe, including Switzerland, including Sweden. And they're also sending me to South Africa, a country that naturally has a significant interest in the role that gold has played and could again play in future. So there are other meetings also in the works, but we've got about 5 of them already nailed down. And I think it's fantastic that the CFA Institute now takes gold seriously as an investment topic.
That's rather remarkable. But I noticed that people from Canada, Australia, probably South Africa as well, resource-based economies, they get this a lot better than Americans, than Europeans who don't have exposure to this market. And that's what we're really up against. We're up against ignorance, and not ignorance in a negative sense, but ignorance in a pure sense of not having the requisite knowledge to understand the concept as it's presented to you. And you and I and a lot of others out there, our goal is really a fight against ignorance more than a fight against power, I think.
I think it's both. I think it's both. And certainly, if you start by fighting the ignorance, then you are in a far better position to the extent that you do believe that the power structure itself might need to change. It's a much stronger hand if the general public is educated in these matters. And naturally, if you work in a resource-driven economy where people are pulling things out of the ground and trying to add value into the global manufacturing an economic chain, and if you're doing so in a very, very basic way such as that, if you understand how hard it is, how much work is involved in getting these critical materials out of the ground, processing them, so on and so forth, and as such, you're naturally more inclined to understand why that stuff has value, whereas someone who works in ephemeral finance where you're coming up with, God knows what sort of complex securities.
A new derivative, because we need more derivatives. So you come up with a new synthetic quadruplex CDO CDS, and
Indeed. Absolutely.
that no one understands and everybody loses money on, which is great because they buy it from you.
Yes, indeed. And so this is, I mean, to be fair, this is one very simplistic way, but not unhelpful by any means. It's a very simplistic way of understanding some of the imbalances we have in the world, where you have primary commodity producing countries, including, of course, the oil countries, who have been, pulling vital materials out of the ground for decades, and in return have stored up all of these financial assets denominated in dollars, denominated in euros primarily, also a handful of other paper currencies. And think of the imbalance that you have here, right? You've got all of those issuers of paper who are running chronic deficits, trade deficits and current account deficits. Why are they doing it? Well, because they've been able to get away with it. That's why they've been doing it. But the rest of the world is losing patience with this. They don't like the fact that they are overweight pieces of paper and underweight, i.e. chronically giving away these vital things they pull out of the ground.
Will Rogers said it best. He said, ignorance got us into this mess and ignorance will get us out. But really, it's not true. We all need to be knowledgeable about this. We need to understand that true wealth often comes from the ground, often comes from the blade of a bulldozer, from the scoop of a backhoe, and from a miner's pick. And we have gotten so far removed due to the interconnected and interdependent division of labor, which is a good thing, division of labor. But in this case, it's divorced us, especially in the States, but in large swaths of the world, from where wealth, where food, where all the resources actually come from, which is the earth.
Well, ultimately, yes. And I don't want to belittle all of the complex, sophisticated, and you could say almost miraculous industrial processes, manufacturing processes, technological processes that, take that stuff out of the ground and turn it into, very, very useful capital goods, consumer goods, and so on. I don't want to belittle any of that. I mean, this is why we've made so much progress since the onset of the Industrial Revolution. But naturally, it is just that much more tangible when you're at the very beginning of that long value add chain to really sense, where it all begins. But certainly even manufacturing economies, I mean, let's face it, right? An economy that is simply fundamentally competitive and exports, widgets or whatever it is to the rest of the world in return for its capital being a good functioning capital stock and its labor being competitively priced labor. Why on earth should these people just forever build up these paper financial assets in return for the hard, manufactured goods that they export? It's not going to go on forever. More and more countries around the world have decided that it's just not in their interest to keep going on with this arrangement. And so they're switching out of those financial assets into gold. And you see, for example, an announcement that just came out this week from Kazakhstan, right, which is a large country that is producing an increasing amount of basic raw materials. Well, guess what? They decided to increase their central bank's gold allocation from 15% to 20%. That is not an insubstantial amount, and it's also in line with what other central banks in a lot of these primary commodity producing and manufacturing economies have been doing over the past couple of years. This is not just a trend, it's an accelerating trend.
Totally agree with you 100%. And not to say that all wealth comes out of the ground, but it starts there. And, the processes, the industries that have grown up around it to take things and turn them into cars, whatever, creates a lot of value. But our preoccupation with financialization of the economy, that everybody wants to be an investment banker or a hedge fund manager instead of an aerospace engineer or a doctor or a biotech researcher, that's a negative trend.
Well, it is, and it's also a legacy of the bubble that we've been through, and to some extent still are in, right? The fact that so many engineers went to work on Wall Street or in the city of London. Why? Because that's where the salaries and bonuses were higher. So you've got an entire generation of brilliant young people who have gone off to work in finance to design, the latest, greatest toxic CDO or whatever it is, and who were deceived by their elevated salaries and bonuses into thinking they were adding real fundamental value to the world economy. But they were not. They were part of this bubble. They were part of the problem. And I think that there has got to be a dawning realization, both at the societal and economic level, big picture, but even at the personal, individual level, that these people are reaching, or hopefully will reach in the near future, that in fact what needs to happen now is that these people need to pack up, take their skill set into a factory for a change, or into some environment for research and development where they can in fact start doing what they were originally trained to do, which is to build a better mousetrap. That's the way you make the world better off.
You're so right. One of my best, closest friends, been friends with this guy 25 years now, and he was an engineer, grew up in the Detroit area, and is he engineering now for a car company? No, he's a patent attorney, which he loves doing, and I don't belittle it by any stretch, don't get me wrong, but what could he have done if he had stuck to his original path? I don't know. I'm not one to judge, but it's certainly something that we all need to think about, because this is important stuff here.
Absolutely. And I think that everybody, don't get me wrong, there are lots of people who are really struggling given the state of the world right now, not just in the developed world, but even in the developing world. Let's face it, right? These developing economies may have made tremendous progress in recent years, but they remain, substantially poorer in a standard of living basis than the developed economies. So, let's face it, there are lots of people in the world who are suffering right now in the wake of this debubbling process, which really is only getting going and has a long, long way to go yet. So I don't want to, again, belittle their situation at all. But there are people who work in finance who have done very, very well for themselves in recent years, and who in some cases have been bailed out by the hardworking middle class and so on and so forth that pays the taxes, that have backstopped the financial system. And these people need to wake up every morning, and they need to look in the mirror, and they need to ask themselves the question, am I part of the problem, or am I part of the solution? And I just hope that as time rolls on here, more and more people will ask themselves honestly that question and come to what I feel is a fairly obvious answer. That is, you've got to really make an effort now, if you do work in finance, to try and find aspects of finance that help get you out of this mess and not deeper into it.
Hey, and that realization of, are you part of the problem? Are you part of the solution? That kind of sums up my thing. I was investing distressed assets, and I saw the legal trends start going against us. And you know what? I wasn't fulfilled by it. And I realized I was really part of the problem. And I don't know if I'm part of the solution at this point. I won't be that presumptuous, but at least I don't feel like I'm part of the problem anymore. And that's a good thing. Not being part of the problem, you might not be part of the solution, but at least you're not making it worse. And I think a lot of financial guys, especially guys who have enough money to retire, are doing it because they're fed up with the destruction that they feel they're at least in some part responsible for. The whole Wall Street debacle, the whole real estate debacle. Now, granted, government policies kind of were the railroad tracks that led to disaster, that led to, going into the abyss. But the financial world constructed the locomotive with no brakes and no reverse, and they put the train on the tracks and they set it in motion. So you couldn't have had the debacle without government policies and bad government policies and fake money and all that. But the industry was complicit in that they made the mechanisms to bring us to disaster. So your point of, am I part of the solution? Am I part of the problem? And don't say that you're working in the financial world and you're peddling derivatives and you're not part of the problem. You can't avoid responsibility for your actions, I guess, is what I'm saying in a very long-winded way, John.
I mean, just because the government subsidizes it doesn't make it right, okay? Or just because the central bank, provides easy money to it, it doesn't make it right. I mean, ultimately, yes, the blame lies with the authorities that created this moral hazard environment which allowed finance to grow out of all proportion to the real productive economy, not just country by country, but the whole imbalance globally is also as a result of finance in general around the world having grown out of all reasonable proportion to the underlying productive potential of that global economy. And I think that, yes, the people that wrote the rules are ultimately responsible for this, but there's plenty of blame to go around. And I mean, the blame game, some people might say it's unhelpful. I actually think it's very helpful because so many people who have played a role in this still don't realize they've played a role in this. And it's my hope that as, again, people, read my book, for example, not that it's necessarily going to appeal to everybody, or read other types of articles, read other types of criticisms of the system that got us here and whatnot. I certainly hope that every day that goes by, every week that goes by, more and more people, as you point out, educate themselves and get out of this ignorance. The fact is, everyone knows now there is something fundamentally wrong with modern finance. Okay, everyone, but they don't know what it is necessarily. But the very fact that people understand there's something wrong naturally encourages them to try to learn more about it. And that's why I so welcome this debate now that we've got around monetary reform, around sound money, around gold, and a possible return to the gold standard. Nothing pleased me more than when a couple of months ago, Fed Chairman Bernanke came out and gave an entire speech basically rubbishing the gold standard and explaining how it was such a bad idea and was totally inappropriate for the modern world. I mean, even though I fundamentally disagree with him, I thought it was great that he was bringing the debate front and center as chairman of the Federal Reserve. And then more recently, when Warren Buffett and Charlie Munger have also made disparaging comments about gold. Now, I think it's wonderful simply that the debate is underway. And again, I disagree with Warren Buffett. I disagree with Charlie Munger for very basic reasons. But I just welcome the fact that the debate is out there, and it's my strong belief, just as anything exposed to sunlight is revealed for what it is. Same thing here. Get the monetary reform debate out there in the sunlight, and sure enough, wait a little while, enough people will come around to the truth, and we will get our way back to something more stable, sustainable, fair, and so on.
Great point. And we mentioned this last time, if I'm not mistaken, when Nixon took the U.S. off the gold standard, or the remnants of it. When he closed the gold window, there was no debate. When quantitative easing was implemented, there was no debate. And all of these important issues, even when the Federal Reserve was created, no debate. So where does that leave us? We've never had a debate on sound money until, well, I guess the last debate that we would have had was I'm thinking back to the Civil War, really.
Well, maybe Reagan's Gold Commission is a more recent example of at least a reasonably serious discussion about whether it made sense for the U.S. to reestablish gold convertibility and reverse what Nixon had done in 1971. I mean, Reagan's Gold Commission, it was stacked with people who were not in favor of a return to gold. So to be fair, like many government commissions, it was set up to fail. But at least at a minimum, it captured the public's imagination for a while. And they published their results in 1982. But in 1981, for example, you also had Alan Greenspan write an op-ed, which was published in the Wall Street Journal, where he advocated that the Treasury begin to issue Treasury bonds redeemable in gold. He felt that that would be a sensible way to help nudge the U.S. back onto a gold standard, not all at once, but issue by issue of gold-backed bonds over time. And then eventually, of course, the entire existing Treasury stock would be comprised of these gold-backed bonds. And from that point forward, you could argue the U.S. was basically back onto a gold standard. So, in the early 1980s in the U.S., you did have a pretty high-profile debate, but of course, that was an awfully long time ago now.
Yeah, it's a generation and a half ago. And now we're back to square one because the debate, I don't know if it was ever really a full-scale debate, and it was important. And I don't think the average person really understood how important it is or was, but he's certainly going to find out very shortly that it should have been done. But we can debate that another time, John. So your book, it's selling well. Golden Revolution, we find it on Amazon. It's available for the Kindle, right?
Oh, yes, indeed. There's a Kindle version. So, I mean, for those that prefer a Kindle format, that's absolutely fine because the book otherwise is only available in hardcover.
Yeah, I've got it on the Kindle too, in fact, now that I think about it. And I'm about 2/3 of the way through, and to me, it's just like coming home again.
Great.
All right. We'll talk to you again soon, and keep it going. Keep getting the message out.
Well, same to you, Kerry. You're doing an excellent job.
Thanks. Be well.
Thanks, Kerry. Bye.